What's going on, family? What's going on? Going a little bit earlier than I intended, 5 minutes early. We're gonna stay on target. This is very, very important. This is very dire for everyone who sees this. Hopefully, you share and like this. And if you're not a subscriber of Financial Literacy 101, I encourage you to subscribe. Now, the feds are raising the rates. Now, this is the first time that the feds have truly raised the rates in almost 30 years, okay? Close to 30 years that the feds are raising the rates. And we're gonna go through some definitions. We're gonna go through some of the percentage and interest rates that have tremendously increased over the past year. Now, some people like to believe that during the year of 2020, right before the pandemic hit, Donald Trump did a lot of things to decrease the interest rate. Of course he did. Everyone makes money when things are cheaper, okay? Interest rates are cheaper, mortgage loans are cheaper, your credit card interest rates are cheaper. All of these things are very, very important. So just like anything else, family, what we need to do, bottom line up front is that you need to really, really start saving your money if you have not been saving your money. But nonetheless, we're gonna cover it. So you guys might want to even join me with a smoke and a pancake, because as we look how the different inflation rates throughout time have really been on the low end for the past, almost 20 years, the interest rates have been very, very low. We look back at 2012 here, family, at 1.7%, and even in 2014, not even 1%. And then we travel all the way to the year 2020. We all know occurred what happened in year 2020, the pandemic around the March time frame when it truly became public to all the citizens of America. And then things start to go downhill from there. Now, during that year 2020 was Donald Trump last year. And don't get political on me. I don't care who you voted for. I'm apolitical, so it don't even matter. We're talking about money here and why this is important for everyone. When we're looking at this, family, look at the percentage rates that inflation that really no one was really affected about it. Nobody was really talking about this because guess what? Gas prices were still low during this time. As Donald Trump was transitioning out of the office, okay, his last year was 2020 into January 6th of 2021. We know what occurred during that day. Nonetheless, this is what we're talking about, how inflation rose tremendously. See, what happens is the pandemic happened, and then directly after the pandemic happened, and by the way, we're still in somewhat of a pandemic. They loosen a lot of the quote unquote mandates, but there's still people catching COVID, and unfortunately, there are still people losing their lives over COVID, but not at the high numbers because over 200 million Americans are vaccinated. So that's what they're contributing that factor to. But what else is going on in the world that is directly affecting logistics? What is directly affecting the food, the gas, the electricity, all of these other industries and prices that's actually hurting your bottom line? You know what it is. It's the war between Ukraine and Russia. And again, I don't care your affiliation. I don't care your stance. If you're for Ukraine, against Ukraine, for Russia, against Russia, it really doesn't matter, because at the end of the day, it is hurting America. Because we decided, whoa, let me back up. I didn't decide this. Let's just say those in power decide that we're going to support Ukraine and we're going to stop taking Russian oil. Now, during the Obama administration, we understand that Obama started to produce more oil than any other presidency before his time. He started using a procedure called fracking, right? Well, basically remnants of oil that they used to throw out. Now they're using it and somehow compiling it, and now we can use the oil from fracking, okay? That's basically what it is in a nutshell. So we're now the number one producers of oil, and we're the number one users of oil, but we still need other oil from other countries because we don't want to touch our oil reserves in Alaska like we already did a couple of months ago when Joe Biden released it, and not only helped out about a month. Now we're seeing prices here in Texas, $5 a gallon plus. So basically everything is being affected. You see where it was, ladies and gentlemen, 1.4% in 2020, the inflation rate. It rose to 7% in 2021, but you really didn't see anyone flicker. You didn't see anyone really buy out. But now that it's at 8.6% and everything across the board is increasing, now there's a red flag. Now there's people hair on fire. See, when we're looking at these things, family, I want to point out a couple of things here, okay? And if I'm going too fast, let me know, because I really want you guys to tune in, stay in, and understand what's going on and what you should be doing with your money, because things have gotten a lot expensive, and I don't believe this is going to slow down this year. These things may start to cool off in early 2023, but no promises are being made here. It says here that it expects 2 more hikes of 25 base points, and these are the Feds talking. They're not talking like simple English, but basically they're saying we're going to raise the rates. That's what they're basically saying. At the end of the year, and then more in the following years, that's plural. Consumers shouldn't just focus on interest rates going up this year, but the potential cumulative effect over the next 2 or 3 years. And that's from Bankrate. Okay, that's from Bankrate. That's a very reputable organization, by the way. Who's going to feel this pinch? Right off the bat, credit card users. Like me, I have 2 credit cards, one with 4%, another with 6%, and then the rest of my credit cards are around anywhere from 15 to 25%. So we're going to start seeing credit card interest rates probably go up anywhere from 25 to 35%. And you should be paying attention, because we know a lot of you rob Peter to pay Paul, meaning that you have more debt at the end of your month, meaning that mid-month you're broke and you're using your credit cards. And I told you time and time again, in order for you to have credit cards and be very, very effective, you have to be a good steward with your finances. And if you're not, guess what? Murphy's Law, anything that can happen will happen. And guess what, family? It's happening. It's happening. It also states here that the Fed's interest rates hikes are quickly passed along to cardholders, with consumers likely to see the higher rate reflected within 1 to 2 statement cycles. Mortgages will also be affected by the central banking hike rates. Why is this important? Because these numbers were really shot low. It says here they believe the mortgage rates will go up to 4%. That is not the case, and there's no laughing matter, because I know people who are buying houses right now, and they're like, yeah, man, I got a good rate at 5%. People with grade A credit are getting at 5 and 5.5%. People with horrible credit are anywhere from 6% and up. So these are some of the things to look at. Let me show you when this report actually came out. This report came out January 6th, no pun intended, of 2022. So hopefully you've been keeping your ear to the financial streets so you understand what's going on. Here it is. May U.S. Consumer Price Index, also known as the CPI. It says came in at 8.6 year on year, the highest since 1981. Some of you haven't even been living, some of you millennials, as well as Generation of Y. It says, and propping the market into pricing to a 75 basis point hike from the Feds on Wednesday. Don't worry, we're not reading everything, just the highlights, okay? It also states here that the U.S. Federal Reserve will need to hike interest rates more aggressively than planned. Yeah, this is current day stuff here, folks, because in January, they're like, yeah, we're going to raise the rates on a 25 basis point, and now they're talking about raising the rates at 75 basis point. Yes, it's getting serious. So when I told you guys late last year, early this year, that we are in a mini recession, oh no, we're going to be in a full-blown recession, okay? Full-blown recession. It states here that Friday's inflation print triggered a multi-day sell-off stocks worldwide. They're talking about last Friday. What do you think your boy did on Friday? I went in and bought stocks. Because here's the thing. Anytime that you guys invest in stocks, you're giving the money, you're investing your money inside these companies, organizations, and businesses so they can grow the business, which make them more valuable, which put more money in your pocket. But when you take your money out, you devalue the company, right? So a lot of these companies are hurting as well now. So when you guys go ahead and sell your stock, guys like me, who's been saving their money, who has reserve cash, I go in, I buy a couple of more stocks, because when the market gets back on track, these stocks are going to triple and quadruple in value and in price, meaning more money for me and meaning less money for you, because you sold your stock at a lower price than what you bought it at. I've been trying to teach you this for years. Hopefully, a lot of you guys have been listening. This guy right here looks absolutely sad. That's a sad face. That's a sad face. That's Bain Capital. That's a sad face. I'm not feeling for him either, because we know we live in a capitalist society. Let me move on. Right here, Federal Reserve inflation fighting reputation. Now, this is a big fat lie, but again, it's the Washington Post. Federal Reserve inflation fighting reputation, and provided a lesson in how government functions when presidents respect institution, with the White House committee on January 6th reminding us of Donald Trump's attempt at institution reckoning. The contrast should be a boon for President Biden. I mean, a boost for President Biden. No. Everybody is squawking. Everybody is batting an eye. Everybody is shaking their fist at Joe Biden for allowing the country to go into a economic and a fuel and food recession. That's what's going on, family. There's no if and buts about it. Okay, let me move on. I have a little bit more here because I want to tackle this very explicitly, so we stay on point here and so you understand what's going on, because all of this means a lot. Okay, they took away my highlights for some strange reason, but anyway, here we go. It says underscores just how serious, and for you guys in the back of the class, I'm right here. Serious federal officials are tackling the inflation crisis after a string of alarming economic reports. Here we go. Really nice. Give me a second. All right. The move puts the key benchmark federal funds rate at a range between 1.50 to 1.75, the highest since the pandemic. Then it goes on, family, and here we go right here. Let's stay here. Give me a second. Officials also laid out an aggressive path of rate increases for the remainder of the year, with new economic projections released after a two-day meeting showing that policymakers expect interest rates to hit 3.4%. Now, this is for the Feds. Now, if the Feds go up, everybody else follows, basically, by the end of 2022, which would be the highest level since 2008. Family, are you with me? What happened in 2008? What happened on the 2008-2009? Yep, the 2008-2009 recession, where everybody was losing their job and all the prices and gas and food and everything else, products and services and everything else was going up. Good and services, family. That means that those monthly subscriptions went up. That means that your milk and eggs and bread and meat and all those things at the grocery store went up. Gas went up. Prices for shipping some vital things to your home, like prescriptions, went up. Everything went up, family. So this is very important to your bottom line. See, a lot of you people don't pay attention to your finance. You just let the good roll with the good. No. This has been, finances is the most intricate and vital part of your entire life. And I've been trying to tell you this, guys, for years. I've been trying to teach you this for years. So let me bring you back to class very quickly. For you guys who may not understand an interest rate, because basically an interest rate is the proportion of a loan that is charged as interest to the borrower, typically expressed as an annual percentage. That we're talking about. And more so over that, the interest rate is the amount charged on top of the principal, top of your loan amount. So let's take, for instance, your principal is you borrow $10,000. That's your principal. The interest rate is how much they're charging you for that loan, okay? And anytime you basically take out a loan, don't you know you need to have assets, okay? Because again, interest rate is the amount of the loan, how much they're charging you for the loan, based upon the use of assets like a house and a car. And if you go get a personal loan, they want to know about your house and car, because if you can't pay, guess what they're going to do? Exactly. You get me. Now, when it comes to inflation, I'm going to give you the book answer here. Let me see. Inflation is general increases in the prices of goods and services in the economy, just as I explained. It says when the general price level rises, each unit of currency, meaning money, goes up, up, and up. Now, family, you know a lot of the things that have gone up. Meat, poultry, fish, eggs, fruits, vegetables. Your electricity went up. Gas has went up. All your utilities went up. Airline fares have went up. This is why I kind of buy my tickets in advance. Like, I'm going home here for the 4th of July weekend. I'm glad I bought my tickets 5 months ago. I'm glad when we took our yearly trip, I'm glad that I bought them tickets about a year ago. And I'm now looking out a year now, but I'm like, are they going to project these prices going to be for a very, very long time? So I have to be very, very careful when I actually do. And what's the thing that most people wouldn't think they go up? Household cleaning products. That's even going up. Rent has gone up. Now, I've been looking at all these stories. People living in California, New York, Massachusetts, Pennsylvania, mostly the West Coast, right? You got California, Oregon, and Washington, and then also the East Coast, majority up. But even in places like Alabama, okay, Texas, Arizona, rent has gone up tremendously, and people are now finding it harder to live at the current place they were renting at. A lot of people are now shacking up, and I don't just mean male and male, female and male. I mean everyone. Some people are going back home to mom. Some people are going home back to dad. Dad and mom are now coming living with the kids. Everything's in an upgrade, and most likely, guess what that's from? Not being disciplined with your finance. I'm telling you right now, family, you need to save your money. And just an overall number here, food prices has increased 10%. And this has been more since 1981. It hasn't increased this amount since 1981. That's right. I was barely born around that particular age. Let me see what some of you guys are saying, because this is no laughing matter. I hope that you guys have been saving your money, that you've been investing in your IRA. And listen, these are some of the things that you should do. First and foremost, if you thought you was about to retire, don't you do it. Don't you do it. Don't you retire just yet. Because let me tell you something, family. Unfortunately, if you have not been strategic with your saving and investing, then if you're already a particular profit and you know that you can live off that particular money, I'm not telling you to cash out. I'm telling you really to understand what's going on in the financial market and make the best decision for you. Because it's going to get bad before it get good unless the government do something. Now, this is always surprising for me because America is a monetary sovereign, meaning they can just print money at will, and the value of the dollar really doesn't fluctuate. It really doesn't go down. If anything, it goes up. But when it comes to resources like oil, America can't just print oil. And I know. Some of you guys, I'm going to go out and get me an electric vehicle. Let me think. I did a video. Yes, sir. I did a video. Where does electricity come from? I don't think people think this like, oh, it comes from the power plant. How do power plants get power in order to generate electricity? It comes mostly from natural gas. But guess what power plants also use, ladies and gentlemen? They use petroleum oil. And look at my signal. It's always horrible. All right, let me see who I got. I got Red Wine Entertainment. Nice to see you. I got my brother Jermaine Anderson in the room. We got Brent C. Yeah. Here we go. So let me tell you, family, I didn't come on here to be long, but I came on here to be strong. This is my message to you all. Save your money. Listen, everything is up. Gas is up. Electricity is up. And if you believe that you're going to go out and buy a $40,000 to $50,000 vehicle and that's going to save you money, no, it is not. You just created a car payment. Now you have to pay insurance on that vehicle. And guess what? Power plants are fueled by fossil fuels, which is mostly gas, but they also use petroleum oil. If you thought that we just prompted up some Tesla coils and anytime an electrical storm occurred that we're capturing electricity from the elements, then you are wrong. That's not how we do things, family. Fossil fuels are the ones who generate electricity that goes inside your home through transformers and converters. I think it goes from AC to DC. Or is that a band? But nonetheless, alternating current to direct current, you know what I'm talking about. But the point I'm making here, family, is that if you're not already being disciplined with your money, then let me know your story, because that's what's going to end up. During the recession of 2022, I saw this video from Financial Literacy, and I thought he was just on there ranting and raving, and 3 months from that, I became homeless. Excuse me, sir, did you lose your job? No, I was living below my means. I was living above my means. And I've been telling you guys this for a very, very long time. Optimal spending is living below your means. Some people can't afford that because of their current situation. Okay, note taken. So you should be living at your means. Oh boy. But some of you Generation Xers, some of you millennials have been living above your means, and Murphy Law is kicking you in the ass. Anything that can happen will happen, and we're living in those present days. Family, that's all I have for you today. Hoping you're enjoying your hump day. But man, things are going up, up, and up, and I hope you've been listening to me. I hope you've been taking heed, knowledge, and wisdom, and my advice. Take it with a grain of salt. I'm no Nostradamus. I can't predict the future, but hopefully this information has encouraged you to dial back a little bit. Oh yeah. Don't get the Starbucks. Yeah, just make it at home. My wife and I, we bought an espresso. It's way better than Starbucks. It actually is. It don't even give you coffee breath. So there's measures to be taken. Everything has been increasing in prices. A lot of you should drive to unnecessary places. Listen, save your gas, save your resources, save your dollar. This is Financial Literacy 101. They don't make any money. Learn money and be inspired. You guys have a great and wonderful day. I'm out.